A very good morning to all of you. It's an immense pleasure to welcome a close friend on board as CA Umesh Narayanappa, a passionate professional. Umesh, having around 18 years of expertise, working with Big Four, currently acts as assurance partner and a managing committee member for Crowe UAE. He leads the ICAI program and ETIP certification for Crowe UAE. He manages the quality review of assurance practice of Crowe Maldives and also a member of the Independence and Ethics Advisory Subcommittee for Crowe Global. He has led assurance engagement for various Abu Dhabi clients under ADA regulations, provided financial advisory to ADGM companies, and have managed diversified portfolios across several industries. He has led implementations of IFRS, ICFR, and several risk management assignments. I heartily welcome CA Umesh on behalf of ICAI Abu Dhabi Chapter for his keynote address. Happy welcome.
Hi, good morning. Is it audible? The room is small so that I think you can hear me, right? But I'm not able to hear you. Good morning.
Good morning.
Okay, I have an idea. Okay, let me take the caller ID. Okay, I have an idea. So let's light up this morning. I want to see who has the strongest and loud voice. So just to make this corporate tax event to start in a very loud manner, let's have one competition. The competition is not going to be free. The competition is going to have some kind of prize. The person who is going to win is going to get a good gift from Crowe. Okay, the competition is very simple. So I want to hear who has the strongest and loudest voice just to say the word yes. Okay, I'll give a demo. It's just yes. My voice is not strong, but I want to hear from you that how you can really go on with this word yes. Can you go for it? I can assure you that the price is not going to be cheap. The price is going to be of a good value. The price is going to be given here on the spot. Saturday morning, you got up early, you came here, you are going to hear this corporate tax seminar, but I want you to get something in return and go back home. Are you in? Yes. The competition is not started, but I can see the warm-up. Huh? Okay, let's go with the countdown. 3, 2, 1, then let's hear out. I'm going to observe. Let's see who has the strongest and loudest voice. Okay? 3, 2, 1. Perfect. I could not make out who had the longest voice, but let's go with the self-certification. Who went for longest period? Perfect. I got 3. I had only 1 gift, but I'm going to go with the 3 gifts. So I didn't get your name. Ankit. Sir? Tejas. Varun. Pankaj. Aditya is my team member. Aditya, I want you to take note of all these 4 people. Though I wanted to give only 1 gift, but I don't want to disappoint these 4. I want to give a gift to all these 4 people. Once my session is done, I'm going to say how I'm going to give a gift. Okay, let's come back to the business. Where is John? John, thank you so much for this opportunity to be a keynote speaker. And thanks to Abu Dhabi Chapter for organizing this corporate tax seminar. I have a partner, Markus Susilo, is one of my good friends. And along with him, I can see some of the eminent speaker who is going to speak on the corporate tax topic. So in order to be more interactive, I want to ask you all some question that's going to set a kind of a flow for me to give my keynote speech. Okay? I can ask some questions, right? Yes. I'll assume it's permitted. Anyway, people have given the permission. Okay. Is corporate tax applicable for the personal income earned by the individual's natural person? No. Okay, perfect. Is corporate tax applicable for the business income earned by the natural person? Yes, perfect. So what is the corporate tax rate? 9%. Okay. Audit is mandatory for companies as per the proposed corporate tax law? Is no, it depends based on the applicable companies' laws and regulation. If audit is mandatory for the free zone companies? Yes. In order to get the benefit of zero rated tax, the companies may need to get the audit. What is the benefit for the free zone companies? Do they have any benefit? What is the benefit? It's zero rated or exemption? Zero rated. Okay. Corporate tax is applicable for all entities for the financial year commencing on or after which date? 1st June 2023. So corporate tax law provisions were published in the public consultation document, right? Okay, how many pages the public consultation document has? 33. Perfect. People are experts. So this the public consultation document has how many sections? This is what corporate tax can do. It can appear to be simple, suddenly things can be complicated. It has close to 10 sections in the public consultation document. Right? Okay, these are very simple and basic concept. I wish the corporate tax law had been so simple. But tell me, as a chartered accountant, do we like if the law is very simple? No, because what? We want complications, right? Why we want complication? Complications means more opportunity. More opportunity means more work. More work means more money. That's what we want. So let's look forward for what corporate tax is going to offer to us. Perfect. So, recently I became a father. I'm a father of a month-old baby. Thank you. I'm a father of a month-old baby. With the arrival of this new baby in our life, our life has gone so much change. Earlier, me and my wife used to talk about traveling, work, stress, partner torturing them, investing, property, so many things. All these things have disappeared. It's only 3 important things we are talking now. Any idea? The first most important thing, what did baby do in the morning? The second most even important thing is, what did baby do in the afternoon? The third most is, what did baby do in the night? This is an interesting topic that we are discussing. Anybody wants to answer for that? Who are parent, experienced with the baby thing? Yeah? So, the baby drank, slept. Is basically loading, unloading. That's the process. That's the only thing I keep hearing, but I keep asking the same question. Okay. Now, let's get into some interesting. Just like the baby, the corporate tax law is going to be a new arrival to the regulatory framework, right? It is going to be a new arrival to the professional arena. So, what is this corporate tax is going to do is going to be filled with surprises, complication, challenge, fun, but at the same time is going to evolve over a period of time. What we are going to see is not the law that is going to stay there forever. Based on the information, based on the data what the authorities are going to get from the market, these laws are going to evolve over a period of time. So, we know that the final corporate tax law is not been released, right? Is it released now? No, we just have a public consultation document. And the applicability of corporate tax law for most of the companies is how many months away? 16 months away. August to December 4 plus 12. Close to 16 months away for most of the company who follow the financial year January to December. Considering this, do you think the seminar like the one we are having today, is it too early? Yes, no? No, the answer is clearly no. Any new law requires for companies to invest time in understanding, analyzing, interpreting and implementing and adapting to it, right? So, I am an audit partner. I specialize in audit. I practice accounting and auditing. I want to give the flavor of accounting and auditing to support this argument. The tax specialists are going to speak much on the tax, but I want to speak on the accounting and auditing perspective as how the tax may get impacted, how the companies may get impacted. I'll give some practical scenario with what I do, okay? It's common practice for the auditors to modify the audit opinion, right? In case if they don't get a adequate comfort, adequate evidence or relevant assertion, account balances, disclosure. I'm an auditor, so I keep using these words. So of course you're all auditor, definitely chartered accountant, but since we are practicing, we keep using these words. So assuming that the auditor do not get a comfort over inventory valuation, auditors are unable to participate in the year-end stock count and they don't get a comfort through alternative procedure. Auditors may not get a comfort over the impairment assessment. So in that scenario, what could happen? The auditors may modify the opinion. So what can happen if the audit opinion gets modified? How does the tax authorities would look into this modified audit financial statement, modified opinion of audit financial statement? Do you think that the tax authorities may have constraint if they see a modification on the inventory valuation, which could have an implication of understatement or overstatement of inventory with corresponding impact on cost of goods sold, ultimately resulting into impact on the profit and loss account that can trigger to differential tax treatment, right? So the companies need to be very cautious in terms of having their books of accounts being kept in a good condition so that the audit opinion is a clean opinion, unmodified opinion, right? So many of the financial statement when we come across, sometimes the client might be little casual to say, okay, go ahead with the qualification, we will see it, because we don't need to give this financial to anyone else. It is only for internal purpose, because currently the limited companies are not submitting the financial statement to authorities. But that mindset has to change. Let's take another scenario. In UAE, there is a general practice of recognizing asset in the books of accounts which are legally under the owner name, right? Legally under the name of the owner, shareholder, related party, using the substance over form concept and the control concept. Do you think this will have any impact with the corporate tax? Probably yes, because how does the tax authorities would look into these assets, the depreciation on these assets? This may trigger a kind of reassessment of some of the accounting procedures that the companies are following. Let's take another scenario. The public consultation document states that the entities are required to file supporting schedules along with the income tax return, right? Read this sentence in the public consultation document. So in the administrative section, it says that the companies are required to file the supporting schedules along with the income tax return. So these supporting schedules currently not being defined. So companies need to keep a watch on what kind of supporting schedule need to be filed along with the income tax return. If you have a ERP, if your data is voluminous, and if your ERP do not support in extracting information to prepare a supporting schedule, imagine the kind of manual exercise the companies need to put in to gather the data. So that's why the companies may need to work proactively to understand the capability of the ERP system. And let me take one or two more examples. With that, maybe I'll try to come to the conclusion. So as we see, some of the large entities are working on various tenders, right? So they are working on tenders for providing services which can run into long period, 5 years, 10 years, 30 years. So the corporate tax can play a key role in determination of the price and the profitability of the project when you're preparing for a tender. So the finance team in the organization needs to disseminate the information about corporate tax to the business side so that they can adequately consider these while preparing a tender. I'll give you one practical example, a recent engagement that our team concluded. Our accounting, advisory and tax team together was assisting one client in preparation of a project, feasibility of a project for a water desalination plant. In fact, Markus was also leading from the corporate side. There was a team on the accounting side. This project tenure was for 35 years with further extendable period for additional 10 years. This project involved determination of cash flow for 30 years, discounting, capex budgeting, and accounting treatment under IFRIC 12, service concession arrangement, and then determining the corporate tax implicability also. If you're making a big amount, if you make a 10,000 dirham bottom line, 9%, it could be only 900, but people making a millions and billions of bottom line, and if you see 9%, do you think these amounts are material? The amounts are really material. So companies need to factor these tax into determination of the project evaluation. So I just gave this example because companies are already factoring the corporate tax in their business assessment. I'll give you one more last example because we can keep going on and on and on talking about various areas which may get impacted with a corporate tax. So one more area I can talk about unique for UAE is preparation of a combined financial statement. Aware of it? Combined financial statement is not consolidated financial statement under IFRS 10, but this is a combined financial statement which is prepared as a hybrid of principles taken from IFRS for SME, not from the IFRS standard. So here there are no control concept, but the management, the entities which are under the common management, the financial could be combined together. So when these financial statements are combined together, how does the authority would look like? If the authority wants a financial statement of respective entity to be audited, these combined financial statement may not be valid. So if combined financial statement may not be valid, then the entities need to prepare a financial statement on a standalone basis. If that needs to be done, what happens to the comparative number? If the companies don't take an action today, if the companies realize and wake up in 2024, 2023 would have already been audited. So the comparative number is going to be unaudited. When the comparative number is unaudited, they may not be comfort on the opening balance for 2024. So when there is no comfort on the opening balance on 2024, then what will happen? There could be challenge in corporate tax determination for those entities. So we can discuss about various entities. I am talking from the accounting side, auditing side, but I'm sure that the experts are going to discuss about tax side, why we need to start preparing for the tax. Now the public consultation document is already out. Public consultation document has various provision based on which we can predict how the tax law would look like, right? So we are smart. We have come from a tax jurisdiction like in India, where the tax environment is so complicated. So when we have understood the tax, in the UAE we can always predict with this public consultation document as how the law would look like. So the companies should start preparing a preliminary impact assessment to identify what risk can happen, what challenges could emerge in implementing a corporate tax provision, and lay out a plan in addressing these challenges so that they can adequately comply with the corporate laws and regulation. So with this, I'll conclude my short keynote speech, and I'll hand it over to the expert speaker, and I look forward to hear from their expert knowledge. If you want to ask any question, I'm here, but otherwise I'm going to call off my speech. Thank you.
Thank you very much, CA Umesh, for setting a very energetic tone to the session. Thank you once again. To present the memento, I request our chairman, CA John George, and CA Sandeep Arora, please.